US recently just announced a second consecutive quarter of negative GDP growth, which essentially means that they are now entering into a recession. At the same time, Britain's central bank just raised interest rates by 0.5%, the biggest increase since 1995. And this happened despite the Bank of England warning that a long recession was on its way, where it's expected that the UK economy will start to shrink in the final quarters of 2022 and contract all throughout 2023. So if the world's economic situation is looking stark, will Australia's luck come to save us again, just like how it did in all of the previous recessions? To answer this question, let's explore how Australia avoided previous recessions and whether the ducks are lined up this time to save us from another recession. I am your host, David Kwan. Let's talk about it. Since the 2000s, we've had three major recessions: the dot-com bust, the global financial crisis, and the COVID-19 recession. And before the COVID-19 recession locked down the entire world, Australia actually hadn't had a recession in 27 years. Why? Because we have a treasure trove of natural resources, mainly composed of iron ore, natural gas, and coal. I would also put battery materials in that category now as well. Not to mention, we're on the other side of the world, right next to a growing superpower, China. And it just so happened that when developed countries around the world was crumbling in the 2008 global financial crisis, China did a massive fiscal stimulus and spent a huge amount of money building new cities. This pushed iron ore prices and other commodities up, and all of those resources were drawn from countries like Australia. That was one of the major reasons why we in Australia was left unscathed in the '08 crisis. But we also had great economic management. The year 2008 was a tough year in the history books. Global financial crisis just happened, and the markets around the world was absolutely in the toilets. But luckily for us, we were showing off our economic management to the world. Back then, Australia didn't have that much government debt. And the reason is mainly because of our superannuation reform that happened in the 90s. That reform required employers to put money in employees' retirement savings, and as of 2022, Australian superannuation totaled $3.4 trillion. Since companies had to put money in our retirement savings, it actually took some of the pressure off of our government to pay for pensions. Because of the superannuation reform that happened in the 90s, the Australian government didn't have a lot of debt, which meant that in the '08 crisis, they had the room to actually put money directly in people's bank accounts. This boosted consumer spending and it stimulated growth in the economy. So while other developed countries were in turmoil, the Australian GDP were actually not that impacted. But after the 2008 crisis, our GDP growth was sluggish at best, but never quite in the negative territory long enough to be deemed as a recession. Now, on top of having a treasure trove of commodities, great economic management, Australia's immigration policy were just starting to peak in the year 2000s. And during the financial crisis, we actually had over 300,000 net overseas migration into Australia. So even if our wages wasn't really growing by much and our GDP per capita isn't rising by much, the sheer volume of new people in the country meant that our GDP can continue to grow at a rapid pace. Now, this is when the story starts to take a turn. Because of the deteriorating relationship between Australia and China, can the things that saved us in the past actually save us this time? Iron ore prices absolutely spiked in late 2021. And while prices have dropped to reflect the new reality, coal is becoming Australia's most valuable export commodity. Now, in previous recessions, China were the major buyers of our commodities. But given that the Chinese economy is deteriorating because of their property dilemma, essentially Evergrande defaulting, there's also a slowing global economy, which is US and UK entering into a recession, not to mention the war in Ukraine. And on top of all of that, China's Belt and Road loans are becoming high risk and do need to be renegotiated. Mostly because some of the countries China lent money to are heavily impacted by the pandemic. Overall, things are not looking that good for the Australian iron ore. But our coal seems to be making up for the decline in iron ore. And the great thing is that there's a bigger appetite for it outside of China. On the government debt side of things, our central banks have already pumped those dollars into the economy in 2020. And that was a major contributing factor to our 6.2% inflation rate as it stands. It is clear that our central banks want to raise rates high enough to control inflation, which essentially means that they want to destroy demand so that prices of goods and services can stop going up. And if you destroy demand, it seems inevitable that our economy will contract before we can expand again. Adding to the fact that the Australian government is forecasting a small amount of net overseas migration, it doesn't seem that we will be unscathed this time from the impact of a recession. While things doesn't look that good for the Australian economy, we have no way of knowing whether we will actually enter into a recession or not. Based on some of the factors that saved us in previous recessions, it does seem like we have a turbulent road in front of us. The question is, what would I do personally? In my previous videos, I mentioned there are three main things I personally will do because I have no idea whether Australia will enter into a recession. And the first thing is securing my ability to generate income. That really means that I'll be focusing on tackling really difficult problems in the company I'm at, adding new skills to myself personally, hopefully more difficult skills and more in-demand skills, so that I can be as valuable in the marketplace as possible. The second thing is building up my emergency fund. To be honest, building up your emergency fund is good to do whether times are good or bad, but just during this time, I'll put a little bit more focus to it so that I have a bigger cash buffer just in case something happens. And the third thing is continue to build a separate income stream outside of my job. And really on this note, while recessions are not really a great thing to talk about and it's generally a period of a lot of suffering, some of the best businesses like Microsoft, Netflix, and Airbnb are built during this period. Because in a recession, what customers actually need will be front and center. And you as entrepreneurs will be forced to build things that people actually need. And if you can serve a customer's need better than someone else, well, you might have captured lightning in a bottle. Until next time, I'm your host, David Kwan.